the FMCG space?
Last 2 years, we have seen a significant moderation in specifically the rural consumption side. And a couple of factors were responsible for that, not the least being 2 consecutive droughts that we have seen. And secondly, of course, we have seen a severe deceleration in the rural wage growth. Last 5-6 years, every single year, we have seen a deceleration in rural wage growth. So it's been flattish for last 3 years. And of course, couple that with the fact that MSP prices have been low, price hikes have been low, and government's focus on managing the inflation and overall macroeconomy, that has resulted in a slight bit of let-off in the consumption spending on the rural side. On the contrary, urban has been pretty decent in that sense. We have seen 7-8% kind of growth in the urban side. But last 6 months, we have seen, depending on which company you speak to, there has been some sort of deceleration and pickup also. Okay. So discretionary side, things are pretty good. Staple side, it's very mixed. And now that monsoon has started pretty well, and we are seeing a normal monsoon after 2 years, hopefully in the second half, one can hope for a consumption recovery, especially on the rural side.
You track a lot of stocks in this sector. Some of your favorites have been names like Britannia, Pidilite, Imami. Now, these stocks have been big wealth creators for Motilal Oswal. But the question now is, how much of an incremental upside is there to names like this? Because these stocks have become very expensive.
Yeah, no second thoughts on that. Consumption space has been very expensive, and all the stocks have got re-rated significantly in the last 10 years for a variety of factors, because the sector growth has been pretty solid in the context of a market where Sensex EPS growth has been flattish for last 8 years, whereas consumer sector as a whole, you would have seen 14-15% compounding earnings growth. And second, lack of choices for investors to invest in beta sectors, given that banks have been going through some bit of a problem. You have not seen any recovery in industrial sectors. So clearly the money has migrated towards defensives.
So there's no alternative, basically.
Yeah, so that has helped. And there is a lot of discussion which happens on valuation, but a lot of it is focused on 1 year forward or 2 year forward earnings. I mean, if you go back 10, 15 years or 20 years also, and if you see the kind of wealth consumer sector has created, I mean, I was just looking at some data points. When companies like Asian Paints, Britannia, Pidilite, Imami, Marico, all of them have given 25% plus CAGR returns across any time period in the last 20 years.
But is that something that can be replicated over the next 3 to 4 years for Britannia, for example?
See, predicting forward returns a little bit tough, and it's left with its own challenges. But I think given where India is in terms of the penetration levels, in terms of the per capita consumption levels, since you mentioned Britannia, I mean, last 3 years they've been growing volumes at 9 to 10%, whereas the biscuit industry has been growing at 2.5 to 3%. Okay. So they've been growing volumes at 3.5x. Last 4 years, their earnings CAGR is 44%. And that is reflected in stock returns. Last 5 years, the stock return CAGR is 69%. So I think I'm quite bullish on some of the discretionary names.
There are a lot of things working in favor of the consumption sector, whether it's the budget spending in the rural economy that has gone up from the government's end, 7th pay commission, etc. What are the stocks, if you had to drill it down to stocks, what are the stocks where you see maximum value now?
Between the two spaces, staples and discretionary, the choice is more towards discretionaries. Okay. And within that space, you have a lot of areas to play. Paints, for example, adhesives, for example. You have home materials, you have jewelry stocks, and of course.
All right, the stock in focus right now is Tata